Hello everyone, I hope you're doing well, hope you're doing alright. This is a very simple observation for Audcad right here. So, a pattern that I really look at is the fake reversal pattern. This is what I call it. So, when the market, for example, is going up right here, it means it is headed towards a level of liquidity, a level of highs. And right here we had this high. This high was taken right there. And the market could have, out of the stop losses that were grabbed right there, completely reverse and take out all the liquidity down here. But instead, what it did is it did some sort of a fake reversal here. And I like this pattern a lot. So the market pushed up into it, then did a break to the downside right here. Fake reversal to the downside. And then the market resumed its original movement. Now, I do understand that there is liquidity right here. If you look at it from a lower time frame perspective, this is what we see. We see lows being formed, as you can see, right here. And then the market came down, boom, into them and then started pushing through to the upside. However, that doesn't matter anyway. We're analyzing the 2 hours time frame. And we can see that, yes, there might be bottoms at this area right there. However, I do believe that even if we want to get back here and take out these bottoms, that we need to take out liquidity to the upside first and then melt from there, let's say, and maybe take out the liquidity to the downside. I will reanalyze, I will check the price action, and I will determine that once we cross that bridge. However, for now, what we did is we did a fake reversal pattern. So we broke to the downside and then we broke to the upside. That's all it is. I'm just saying it in a fancy manner. We broke to the downside, then we broke to the upside. We faked traders in. We told them, hey, we are reversing from here. We just took liquidity to the upside and we are reversing. And then we said, okay, go fuck yourself. And we continued the movement through to the upside. And therefore, when that happens, I generally look at the next level of liquidity, which is right here. And I say, you know what, since this is the next resistance line, let's call it that, I believe that will be targeted next for Audcad from here all the way up into here. Let's see how that goes. Hello everyone, I hope you're doing well, hope you're doing alright. So as agreed for Audcad, as you can see, the market pushed through to the upside, liquidated all these highs around here, reached over these tops right there, liquidated them, and then started pushing through to the downside. As agreed before, I told you guys that because of these liquidity forming through to the downside as well, that the market might just target the ones to the upside first and then come back for the ones to the downside. And this is what I believe will happen for Audcad. So next step, next observation for Audcad is for it to just melt down and reach down into these lows, 1 to 2 risk to reward ratio, and we'll be done. Let's see how this goes. Hello all, I hope you're well. Remember the observation that I showed you for Audcad? Well, this is the day trade that I'm taking for that specific observation. Audcad to go to the downside. This is the day trade right here. I will be explaining it later. However, I just wanted to show it to you as soon as I execute right here. Let's see how this goes. Hello all, so very simple right here. The market pushed through to the upside. That was the first observation right here for Audcad. And then we had another observation from here into here that is done, as you can see. And inside the second 2 hours observation, we had this specific day trade. This is what I showed you and this is what I want to talk about. So right here, as you can see, very easily when I took that trade, that's what happened. Look at this. The market formed tops right here. Correct? Correct. Now, where are the stop losses of those double tops? Right here. Those stop losses have been triggered and then the market started pushing through to the upside, to the downside. Now, on the opposite side of the market, I look at this. 1, 2, 3. Where are the stop losses of those bottoms? Right here. So as you can see, what I'm simply trading is I'm trading from a liquidity zone to another liquidity zone as my trigger. So right here, you can see 1, 2, 3 touches. Stop losses right here, liquidity grabbed, liquidity taken, reversal right there, enter, target the liquidity on the opposite side. Those stop losses right here have been triggered, and then the market retraced from those stop losses, as you can see. The market reacts to liquidity zones, and that's it for today's video, guys. Feel free to subscribe, notifications, and I'll see you in the next video.